How many rate hikes are we until we get a real rate, an inflation-adjusted rate increase where Janet Yellen's not having lunch with Sam Fleming, she's taking shots at the bar with Sam Fleming?
Well, I don't know about shots at the bar, but look, the underlying inflation rate's around 2% right now. And I still think it's creeping higher, and the risks are it goes higher. Long-term rates, real long-term rates are around 1%, a little bit higher. I think we've got to get back to 3%, come back to that number again, the number 3, now this time in terms of interest rates rather than growth rates. And I think that's where the Fed is headed to. And, you know, again, a number of people at the Fed thinks that I think 3%, you know, that's the median long-term estimate of where the Fed thinks the funds rate should be in normal economic times when inflation's on target. So right now we're still several rate hikes away from there. And
all right, what happens to, John, what happens to actually markets if treasuries touch 4%? Will they touch 4%?
Well, 4% is actually our forecast for 10-year yields at the end of next year. And the question is, what is it that drives interest rates to 4%? If the long-term rate goes to 4%, because the U.S. economy is strong and real rates are rising, that will be met with probably higher equity prices because the profitability story will be strong. If we go to 4% because the Fed doesn't do what it needs to do, and inflation expectations rise, that becomes the negative. So I think if we gradually see rate increases that pushes the 10-year to 4%, with a real rate in the range of 1.5%, maybe a little bit higher towards 2%, there'll be bumps along the way, but I think generally that will be supportive of the market,
right,
not negative for
and
the
John,
market.
And that's your base case, right? That actually, if they do the right thing and that you have an economy that's okay.
That is absolutely correct. I mean, economic growth right now is running above trend. I do think that the Fed's going to continue to raise rates on a quarterly basis, and the 10-year is going to rise to 4%.